like that?
All right, everyone. So this panel right now, we're going to be talking about different strategies that you can use for flipping in your business. We're just going to go all around and introduce ourselves. A little bit about myself. I'm a real estate agent, contractor. I've flipped over 100 properties, and we've got an awesome panel here. Excited to pick their brain on strategies and a lot of knowledge on the stage. So.
I'm Sue Hough with my Rehab Academy. I'm also the owner and manager, founder of August Limited. I've been in construction for about 21 years and doing fix and flips, buy and holds, and a couple of other different unique, interesting projects with various different people for about 23 years now. So, hi.
Hey, good morning, everyone. My name is Mark Buford. I am head of business development Midwest for Lima One Capital. Lima One Capital is a bridge lender to real estate investors who invest in residential real estate in the single-family 1 to 4 or multifamily 5 units and above. So we have a suite of 3 products: fix and flip, fix and hold rental, and we do multifamily 5 units and above. We also do new construction under our single-family 1 to 4. We'll soon have a one-time close for a build-to-rent or construction to perm that's coming out in a couple of weeks. We're bank competitive on price. We're fast. You get your money quick, and we'll be talking about how we do that today. Lima One Capital we're based in Greenville, South Carolina. Company started by 2 Marines. So the adage is, do your job or someone dies. So that's how we take the business serious. So
I love that.
I look forward to the conversation.
My name is Rosario Terracciano. I'm the CEO and co-founder of ClickInvest. ClickInvest is like the investor's version of Redfin. So our clients can set up searches. They can look up properties for themselves. Every single deal that is sent to them or dropped into their dashboard has all of their numbers already baked into the deal, so they can see how much their ROI would be if they're flipping, or what their yield would be if they're keeping the property as a rental. Every property has a rehab number already done for it, and a suggested offer amount as well. And if you want the deal, you just click submit offer, and we submit the offer on your behalf. ClickInvest has done, between my partner and I, we've bought and or sold over 7,000 properties for our clients. We've worked with Blackstone, which is one of the biggest real estate hedge funds in the world, and we work with a lot of local investors in Chicago. And we're also in Florida, and I was really thrilled to hear Neil on his talking about that corridor of opportunity, because we actually launched in Orlando and Tampa back in December, and that market's been on fire for us there. So,
Awesome. So for you guys, we'll just start. We'll go down the line here. From your experience, either personal experience or the investors you work with, what are the best investors doing on a consistent basis?
I'm partial to construction. I would say every successful investor that I know, on a beginner and mid-level, would be their knowledge. They have a working knowledge of construction. I think it's paramount that each one of the investors, they excel at knowing what needs to be done, the realistic dollars, and how that affects their bottom line, the ARVs or return on investments, and are never usually blindsided by what that construction costs and how it affects the project. So.
Yeah, so I'd say, from elite, intermediate, and beginning level, from a beginning standpoint, guys who or girls who have done their homework, they've become educated, they've connected with people to teach them, and they have project managers, they have money they've saved, or they have relationships that can provide funding, and they provide their paperwork, so they're organized. At an intermediate level, these guys are starting to scale, processes and systems in place, and it's been talked about here. Trust me, it's proven, it's tried, it's tested. When you have processes and systems, the numbers take care of themselves. And on an elite level, You know, those guys, it's like a machine. So again, the process, the systems, capital never constrains them because money fluctuates. So when you're connected, my favorite saying is real estate is a contact sport. When you're connected to folks, deals happen. So if you're organized and you've done your homework, and let me add, you have to be a good person, right? Ethics. That's what matters in this business. So be organized, think creatively, and without emotion, don't go outside of what the numbers say.
Yeah, you hit some good points there. Definitely integrity. This is a really small business in a big market, right? So everybody knows each other. So if your goal is to go around screwing people, you're going to be out of the business pretty quick. People are going to catch wind of that fast. I'd say capital, obviously. For me, I mean, I've had the opportunity to work with a lot of investors, hundreds of investors, and also working with Blackstone. I mean, clearly Blackstone had the capital, right? But a good investor has the capital in place, or they have the sources of capital in place that they can get money when they need it, when a good deal presents itself. The bigger guys have staff in place, they have the right team in place. Whether you're doing this yourself or you have a team, let's say you're doing this yourself, you have the right contractors in place and you have the right lenders in place. So the staff doesn't always mean people that you hire. It could also mean the people in your network that you're connected to. And then lastly, but in my opinion, most importantly, the systems. If you don't have a system for tracking everything you do, from sourcing your deals to analyzing your deals to inspecting your properties to running your construction projects to selling your property on the back end, you have to run it like a business. I mean, McDonald's, they don't just show up and wing it. They have a system in place.
Yeah, I think you guys have all great points. I have an old saying that if you buy it right and you rehab it right, you could screw everything else up and still make a lot of money flipping houses. And when you buy it right, the financing is not going to be a problem, or you could partner with someone. So with that, what do you think is the biggest problem right now facing investors?
We'll start with you now.
So right now, I mean, as we start to see margin compression, you really got to sharpen your pencil. The biggest problem, ARVs are starting to top out, we see. So the biggest challenge is not doing that, not really knowing the market, the deal that you're getting, overpaying it, paying for it. And then on the construction side, Sue, I'm sure you're going to get into that. On the construction side, it's contractors' day in the sun. So you have to have an A, B, C, D, because things always happen in that space. So 95% of projects that I see fail because of usually the construction side of it.
I would say saturation in terms of the amount of investors in the space today. I gave a chat yesterday on technology, and if you guys know anything about the data, and here's my give for today, one of them at least. There's a site, or there's a group out there called Atom Data Solutions. You should write this down, ATTOM Data Solutions. These guys are like the Microsoft of real estate data. So if you want to know what the trends are, what's happening in the flip industry or the flip market, go to those guys, because they can tell you what's happening on a quarterly basis in the markets that you're in. Atom Data came out with Q4 results in 2018 numbers. Last year, there were 207,000 single-family homes flipped by roughly about 146,000 investors. Okay, so if you run the numbers on that, the average investor is doing 1.26 flips per year. I mean, that's pretty ridiculous, right? And now that we're in multiple markets, what we're seeing is there's a gap. The best investors in the marketplace are starting to do more and more and more because of the capital and the systems they have in place, while the average investor is starting to get squeezed out because it is becoming a game of margin. How many of you guys are familiar with the term iBuyer? Raise your hands. Okay, an iBuyer basically is an investor with hundreds of millions of dollars behind them, in some cases billions of dollars behind them. Some of the biggest iBuyers are OfferPad, Open Door, and now Zillow is rolling out their instant offer, right? To me, that's the biggest threat we've ever seen in real estate, especially from the investor side, because these guys are gobbling up properties in markets like Arizona, also in Florida, Tennessee. Especially for wholesalers, it's gotten super, super competitive. And it's tough to compete against an investor with billions of dollars or hundreds of millions of dollars behind them that can settle for a 7% margin. Okay, where the average investor needs at least 15% to make sense. And furthermore, sorry, I can keep going on and on about this. I love data, clearly. So last year, the average gross profit for investors in the US was $62,000. Gross profit, okay? So if you bought a house for $100,000, that means you're selling it for $162,000. Sounds like a good deal, right?
It's horrible.
What?
No, it's horrible.
It's horrible. Why? Why is that horrible? You're making $62,000.
You don't have holding costs in there, construction costs.
Oh.
That's gross, not net.
Oh, it's gross, not net. So construction, holding cost, financing cost, buy-side cost, sell-side cost, you're dead. Dead. So I think the biggest problem, take the iBuyers aside, or put them aside for a second. I think the biggest problem in real estate right now is, the biggest problem by far is marketing. And what I talk about is HGTV and all these other lunatics that are telling you now's the time to buy. Because if you look at the data, stop listening to the masses and start looking at the data. The masses in the marketing will tell you, best time to flip ever, 2019, start your flip business, where the data tells you it's the worst it's been in the last 7 years, right, in terms of your margin. So I don't say this to depress you guys, I say this to take the blinders off and start looking at the data and start looking at your systems and how you run a business to really refine your processes and how you do things.
I'm going to reiterate a lot of what you gentlemen just said. What I'm seeing with investors that I know is right now there's just a saturation of investors. We have very low quality inventory. And unfortunately, what I see happening as well is there's so many people eager to get into the fix and flip market because they think that it's the easiest, it's the quickest, it probably has the most dazzle and pizzazz to it. But right now is not a good time to be doing it. The low inventory that's out there is driving the prices up because the inexperienced and eager investor is really not putting pen to paper at all. And because they're eager to do it, when they're going to highest and best, they're overbidding projects, not knowing their construction costs, and very much like you said, they're leaving out huge expenses, not considering them, and they're buying foolishly. And what's happening is it's just, there's an artificial inflation due to lack of education. And it's just driving the prices, what little inventory is left, it's driving those prices to a point that, in my opinion, most of them are not profitable deals. But I'm still seeing people invest in them. I think it's a great time for buy and holds. I mean, we've got really low interest rates, long-term interest rates. Even, I think that it's a great opportunity for that. But fix and flip, not right now.
Well, and Josh, I'll just add to that, from a lending standpoint, we're starting to see trends of defaults among that demographic of, the inexperienced borrower. So, as you start to forecast where we're going next year and a half, 2 years, that will result in the cycle. Yep. And we will see those on the other side, unfortunately. And that's where you have to be prepared in your business to have your capital built or your relationships with capital to be able to take things down quickly.
Rehab lending, no offense, because I work a lot with Mark, but rehab lending is the new subprime. If you look at the data, okay, there's more money in the space right now in real estate than we've seen in at least 11 years, okay, in terms of rehab lenders in the space. You've got great companies like Lima One, and then you've got everybody else. You walk into a conference and everyone's a lender now. Pitbull conference and all this stuff. You walk in and everyone's a lender. Everyone's a lender, right? So there's like 18 billion right now in lending out there. So you have more hard money financing in the space than we've ever seen, and our profit margins are shrinking. So where's the margin? Because your gross profit's shrinking, yet everybody's leveraged. You guys get that? So it's like a lot of that profit goes towards leverage. So, yeah, I don't know where I was going with that, but I hope that makes sense.
Well, thank you, Rosario.
Yeah. Well, I have another saying I always, and I've probably gotten this from somebody else or heard it somewhere, but it's like there's either deals, it's easy to get deals or it's easy to get money, but those two things never exist simultaneously.
Yes. Oh, right on. And one more point came back. It's little birdie. There's still plenty of opportunity to make money in flipping. Okay, there is. What we recommend to our clients, so if you're a Click Invest member, Click Invest client, whatever, what we tell our clients is this. You want to focus on the segment of the market where if you couldn't flip out of that house, could you rent it and be okay? So we tend to focus in the price point of $250 and under, sometimes $200 and under, but that's where we like to focus. The value add stuff, the stuff you see on HGTV, if you really ran the numbers and you know what you're looking at, none of those guys are making money. None of them are making money. So second story additions, 2-flat deconversions, all that stuff. High risk, like right now in this market, this is not the time to touch anything like that. 2012 to 2016, go for it. Now, run. Because when you're spending 12% on your interest, on your loan, and 2 points, do the math. On a 9-month project, 12-month project, you made the contractor a crap load of money, the lender money, the broker's money, and you made nothing.
I'm at 8%.
Call Mark.
Just FYI.
Yeah.
One comment really quick about HGTV. Really, guys, just turn it off. Say no. I don't care what else you do. I've had so many people, the numbers are so unrealistic. It's, and people believe it. They're not real numbers. They're not real time sequences. They're not real numbers. People are like, oh, do you watch it? No, I do construction all day long, so there's no reason for me to do that. But it's just so phony. Please don't get caught up in those reality TV shows where they're flipping and everybody's smiling at the end. You know, it doesn't happen that way.
No?
Yeah.
Ever.
I've talked to a couple different producers and have heard through the grapevine. A lot of times those numbers that they even put on the thing, they didn't even talk to the actual investor. They literally made up the numbers. So most of those shows is very, very manufactured.
Yeah.
But so since obviously margins are tight, what's the best way that you're seeing or have seen for investors to get deals right now, whether that be a rental or a flip? Because there are people still successfully flipping. So what people that are doing it successfully, what are they doing to continually get deals consistently?
Well, I'll take that first. Again, I said real estate is a contact sport. So those who I see are effective, they have relationships with either wholesalers or they're leveraging resources like Click Invest to get those deals faster, and then they can act faster, and we have the relationship and we can close quicker. And they're buying right when they do that. So those relationships allow them to buy right. And deals come to them. When you're leveraged in the marketplace, the deals come. And then you just have to select that. So those are the guys that I've seen are successful, who have relationships, because inventory is down right now. So what's your strategy?
I see similar. I think the people that are doing it successfully, I've also seen a little bit of a trend recently, and maybe it's just within the, the group of people that I know, is maybe going into some neighborhoods that are a little bit riskier from a socio-economical standpoint, because it's just a little bit more stable of a rental buy and hold market. You've got a little bit more leverage for fix and flips if it's something that you're willing to do. That's a trend that I've been seeing a little bit. I think that's all I have to chime in on that.
Well, I'll back that up. Successful flippers also have a strong buy and hold strategy, and the flip properties are just feeding that. So.
Right, and back to what you said, it's kind of like if the mentality of if you're going to do a fix and flip and you can't sell it, make sure that you're in a tight enough rental market that you can have a quality renter in there that's going to support your investment. I mean, I think that's a strategy now that kind of goes without saying in this tight market.
Thankfully, we're not having a tough time? Selfish plug there. So but we're big believers in systems, okay? I mean, when you look at Blackstone, they bought 50,000 homes over a 3-year period. Obviously, they had capital, but they had systems for buying everything. So our top clients, and at a time in the market where the average investor is doing less and less deals, our average client is doing more and more deals. And that always comes back down to systems, and it's leveraging systems. Our average client could see 20 to 30 deals from us on a daily basis and submit an offer within 30 seconds. If you're doing this yourself and you have a Redfin feed and you get a property sent to you and then you have to drop it into a deal analyzer and then you have to set up an appointment to go walk it and then you have to meet your contractor and then you got to determine if you're going to submit an offer, and then by day 2 or 3 you submit your offer, that deal is gone. Because within 30 seconds of that deal hitting the market, we already know about it, we've analyzed it, and we're sending it out to our clients and we can get an offer within a minute. So systems is a huge deal. So our top clients leverage us or systems like ours, whether they're doing off-market, buying at auction, whatever. So the time that they're freeing up, I mean, some of our top guys that are doing 50-plus deals a year have confessed that they were spending 20 to 30 hours a week just on acquisitions. Now they spend 2 hours a week on acquisitions because of us. So what happens when you get 28 hours of your life back, right? You can focus, when we talked about marketing in the last session, now you can be out there networking. You can be out there getting cheaper money because you have to find margin in every area of your business in a margin depression, right? So you have to find margin in your construction. So maybe you're going out spending your time finding better contractors, finding cheaper money, finding out how to execute better on the back end. So that's where the best investors are winning. If you're just winging it, you're not going to be in the business very long.
So with that, I completely agree. I mean, good deals don't last long. If something's been listed for more than a couple weeks, it's probably not an investor. It's definitely not an investor deal today more than ever. But on the flip side too, I will add, sometimes there are good deals that have been listed for 6 months, 12 months, because now they've been sitting on this house and they've got this motivation there and they're ready to dump it too. So that's also another, and I know you guys do that as well at Click Invest. You target some of those stale old listings.
Yeah. Josh, can I add something to that? Just going back to relationships, just speaking, I see a few of my clients in the room, and when you have, if you're leveraging debt and you have a strong relationship with a lender, when you've built up that track record, some things might go overlooked because we trust in your business process, and you can close just that much faster. Once you get a contract and a scope, you got title insurance, we're closing. We don't have to really analyze your bank statements anymore because we're familiar with you. So build that strong track record, with a lender that's giving you a good price.
So, sorry. Go ahead. Me and Josh are wrestling for the...
So how do you make the strongest offer possible? So this is something I would take a note on this. Waive every single contingency you can waive. Now this means you have actually had to visit the property, but how do you make your offer stand apart? Waive every contingency. Let's say the property, your offer is $100,000. Literally, you can give a $100,000 earnest money check. No contingencies. Is that deal on the seller's mind, is that going to close? Versus an offer they might have gotten for $105,000 with some sort of financing contingency or some inspection contingency. So make your offer with a close. So you need a good lending partner that can close quickly. If you don't have the capital to do it, but make your offer as strong as possible with a large earnest money, 100%, that really puts you apart. Close quickly and waive your contingencies after you view that property.
Agree. In a market as competitive as we have today, the worst thing is when you get a great deal and you lose it because you couldn't fund it in time. And that happens all the time when an investor's working with the wrong lender. You get the deal locked up, you're super excited, it's a great deal, and then they don't send the paperwork over to the lender for 2 weeks. And then all of a sudden you got to close in a week, and now you put all this pressure on the lender to get it done, and then you lost the deal. So working with the right lender is huge. These guys are great, but if you don't have a great lending partner, again, it's so hard to find a good deal. When you find them, you got to hold on to them, and you don't want to lose the deal because some part that you could control, you didn't control, and then it blew up in your face.
So we talked about the financing. So what are some different ways and trends that you're seeing, whether that's joint venture, hard money? It seems like there was a big push with crowdfunding. I don't hear so much about crowdfunding anymore, but what are you seeing now in today's marketplace with ways that people are structuring deals and ways that people can structure deals where they thought, hey, maybe I don't have the credit or the experience. How can I get a deal funded?
I'm seeing probably I'm seeing more partnerships, individuals partnering with somebody with more experience, and working deals like that, especially for the new investor. I highly recommend that also. I'm sure, Mark, when you're going to lenders for the money, especially hard money lenders, or experience goes a long way. As a matter of fact, there's some lenders that if you don't have a certain level of experience, just aren't even going to look at you. So if you partner with somebody that's new, that has some more experience, or if you're looking for somebody that has a little bit more capital, or if you need somebody that has a little bit better credit score, whatever your need is, there's really great opportunities, I think, for people that are more experienced or have what you're looking for, and to do a nice partnership. Please just, I've seen a couple of them. Consult with your attorneys. Have it all put in writing. Handshakes are not advisable in this type of situation at all, especially when there's money on the table.
So I agree. I'm seeing joint ventures leveraging the experience of someone who maybe has done 5 flips. If you're just getting in, that's what you want to do. Build that relationship with that person, learn, and then you also get credit for it. So we'll have both entities on the HUD, and once you get through the project, you can do another one. Some of the other creative stuff, I'm starting to see that middle, intermediate level investors start going into new construction because now you don't have that much the barrier to the marketplace of looking for rehabs. So there's a lot of lots still in the city of Chicago, or wherever you might be from. Look at lots. We're lending 90% leverage on new construction. Seeing strategies of build to rent. There are developers building entire communities, new construction, and renting them out. So that's another thing. But you definitely have to get creative now to think about where the market's going. Hedging on rents right now is in great communities is a pretty safe bet. Yeah. We just talked about that. So, but partnering is the number one thing I think that we're seeing a lot of as you're starting to see the margin compression.
With the amount of money in the space right now, most of our clients are using hard money or rehab lenders. Not as many cash guys as we used to work with. We still have them, but not as many cash guys. There's some partnerships here and there. There's 3 main parts to every deal. There's the money, there's the construction, and there's the deal itself, right? So, sorry, I can come off as a little passionate. I don't mean to get angry. I've dealt with a lot of stuff over the years, and I've seen a lot of people get screwed. Those programs out there to tell you, use other people's money and, hey, if you lose it, no biggie, it's not yours, right? Like, don't put your grandma's money up on a deal. I've seen so many people lose relatives' money, friends' money, family money. It's just not worth it. So if you're going to do a partnership, make sure you're bringing something to the table. So maybe you got the deal and the construction and that person's the money piece. And if they're not accredited, they have enough money that they're like, hey, you know what? I'm putting this money up. If I lose it, I'm out the money. But they understand the risk associated with the deal. And don't overpromise because it's not going to happen. We're going to make this much money. Usually you don't. So just be mindful of that when you go into it.
How do you think investors, especially flippers, can minimize the risk once the property is purchased or under contract?
Know your construction dollars. I think the biggest failure at that point on a fix and flip is because, and I hear this all the time, and you said the 3 components are money, construction, and the deal itself. And for whatever reason, everybody not everybody, quite a few people, especially new investors, they want to believe that the construction dollars are half or less than half of what the real cost is. And so if you're starting off with a smaller project, which we all have, that's where we have to start. So you're starting off with maybe a $125,000 project. Your margin on the end is, you're going to be, making $20,000. But that's on the assumption because you listen to your wholesaler tell you that there's $22,000 of rehab in there, and that's the number you put in your calculations. But what happens when the reality is the construction cost is really $55,000? You're underwater. Knowing your construction dollars, if you don't know construction, which you don't have to know it, no one's expecting everybody here to know how to build a house from scratch. You need to have a partner or somebody close by that you trust that does know the numbers and that works them very accurately. And you also, with 100% certainty, depending on the size of the project, minimum addition onto your construction dollars is 10% for unforeseen. If it's a larger project on an older house, that number needs to increase. You cannot eliminate that number because I promise you're going to need it. Especially if you're working with margins, you're going to make $15,000, $20,000, $30,000 on this. That's one failed plumbing system away from you going home, losing your whole investment on this.
So it's, Dave, you close. You should be ready to start demo.
Yeah.
And because the juice starts immediately. So the construction piece is critical after your closing. If you're not a GC or you don't know construction, you need a good project manager.
You do.
And you need to visit the site if you're new a couple times a week, if not more. You don't want to get in the way, but you want to make sure you're there and you're watching your dollars. Because the juice is not going to stop until it's done, sold, and you're on to the next one, right? So you have to calculate that burn rate and have the resources to get it done. So I think it's all associated with the construction process.
I would, if you're new and you're hiring somebody else to do the work, I think, Mark, I don't know if I'll disagree, I think you need to be there no less than 4 days a week, and you need to be there really early in the morning. Subcontractors that are not willing to show up to work before 8 o'clock in the morning, I would recommend replacing them right away. In this industry right now, and especially in the Chicago market, there is a tremendous amount of quality, competent, wonderful tradesmen and women that are available. And the rule of thumb, having been in construction and now for almost 22 years, the single biggest red flag that I ever come across, and it's never been wrong, is somebody that can't show up to the job site before 8 o'clock in the morning. Okay, maybe 8:15 if they ran into traffic, but I'm talking on a consistent basis. If you get somebody showing up to your job at 10 or 11 o'clock, they're not serious about what they're doing. If they're not serious about what they're doing, they're not going to be serious about your project. They're not going to care about your project. They're going to come at you with overruns and things like that that should have been initially inspected. And it's somebody that's not willing to work 8 hours a day, more than likely has money problems, and they're going to try and put it on you. Show up, be at your job site early, and expect your trades crews to be there. There are exceptions to the rule. If you're at the end of a project and your electrician just has a few hours of work to do, once you establish some relationships, that's entirely different. But your framer who shows up at noon and leaves by 3, if that's Monday and Tuesday's the same thing, by Wednesday you need a new framer.
So I'm seeing also real quick, my elite level flippers, as they're starting to sharpen the pencils, they're bringing construction in-house. One of my clients just talked to a GC and said, how much did you make last year? And he told him. He added 20% to that. And then a bonus for every time he comes in on time. And that's going to save him over 25% on his construction costs by bringing it in-house. So those guys are really, again, sharpening the pencil, looking at where the money's going right now, because he determined last year what he spent on construction, just hiring that GC directly. So now he's an employee of his company, so that's something else we're seeing.
Yeah, we're seeing that more and more too. I mean, when I was flipping and buying rentals, I was a licensed GC. just to cover as much as I could. Plus, there's some perks to that, obviously, because you're paying yourself. I mean, I don't want to say you're double dipping, but you're in the deal. Best investors I've seen in the marketplace prep everything ahead of time. So while they're in escrow, before they even close, they've had it walked with their contractor. They got their bids in place. Some guys go as far as even ordering material if they know they're moving forward on the deal for sure. Some of the municipalities, you can get a jump on them and get whatever you need to get started so that the day you close, bam, crews are there. Those guys are the best in the business. When we were Fannie Mae's biggest broker for a while, and there was basically an equation that you could work out. For every $1,000 that's in your construction bid, that should equal 1 day of work on the project. So if you have a $30,000 budget, it should cost you it should take you 30 days to get that job done. $90,000 budget should take you 90 days to get it done. Okay, that's how you should be looking at your projects. When you said the juice is flowing, it's so true. You're paying on everything. Okay, every day you sit on that property, it's costing you money. Okay, so you need to make sure you're getting a jump on it as quickly as possible. The other thing, as far as contractors, contractors are your biggest partner in the whole deal. More than your broker, more than your system, more than your lender. A lot of guys go into real estate thinking, oh, I'm gonna strong arm my contractor. Don't fool yourself for 1 minute. Because the contractors, especially in the city of Chicago, are the best salesmen out there, okay? They'll walk your property and make you think, oh, yeah, 30K, yeah, we'll get it done, no problem. 2 weeks into the project, here's a change order for another 20, okay? Treat them with respect, befriend them, become their partner. Do not belittle them. Do not talk down. Do not treat them as if they're inferior to you, because you will pay for it.
So I'm going to add one more thing. You just made me think of it. So Limon Capital, our draw process is something that is really a value add after you close. There's some clients in the room. They can confirm this, but you're going to request a draw through the portal, and that inspection is going to happen immediately. I have clients who get their draw back the same day. So this is what you want in a lending partner, because you're going to get that contractor paid. He's happy, project gets done. So that's a value add that we offer. Everything's done through the system, automated, but you do have a construction analyst you'll work with.
The worst feeling in the world is pulling up to a job site at 8 a.m. for 3 days in a row and nobody's there.
As a little bit of a shameless plug too, one of the services that I do offer is specifically project management for especially your larger projects and things like that. And as an investor, happy to incorporate, and if you want to do this with a project manager or general contractor, you want to incorporate, it's mandatory to have time frames in there. I mean, even without investment projects, I have my subcontractors that are rely on me. I have time frames in there too, and incentivize your subcon or your general contractor or your project manager, and be fair and realistic. But there's things that come up all the time that are unexpected and unforeseen that even the most seasoned contractors can't predict. Weather's one of them. I mean, we've had how much rain? I'm waiting to dig a foundation. I can't stop the rain. I wish I could right now. Sometimes the plumber can't see what's behind the wall. But as I said before, make sure you have that 10% minimum budget in your construction dollars to cover those expenses. And partner with somebody you trust, and that possibly, if you can, if it's within your scope of work, incentivize those time frames and make them mandatory.
One thing I think as an investor, so critical for your time frames is making sure that the contractor you're working with, you guys are sharing a calendar.
Yeah.
And the plumber is showing up this day, the framing starts here, the rough electrical, rough plumbing, HVAC, the drywall, but everything is scheduled out. And then if there's a delay because of weather, there needs to be a system in place. Well, hey, Mr. Drywaller, I know I had you scheduled on June 14th. I need to move you to June 21st, but you can't call them the day before and let them know. There has to be a process. A calendar is going to be your best friend. That's why we got our GC licenses, because we were making sure that our GC was calling all of the subs, instead of calling the plumber day before, hey, I need you out there tomorrow, the plumber should have known this a month ago.
What does it cost to get a GC license?
It's,
300.
Yeah, it's,
In the city of Chicago and
How
every
much?
other municipality is like a, but if you actually own the home, I'm going to clarify something.
Yeah.
If you are the owner of the property, you do not need to have a GC license.
To go
You
in.
you can pull it yourself as an individual person, as a homeowner.
You stole my thunder.
I'm sorry.
No, I mean, okay, you want a construction or flip hack or whatever you want to call it. Everybody uses hack nowadays, right? So pull the permit. You pull the permit.
Right.
Contractors hate going to the village.
I won't pull permits anymore.
Okay, contractors want to swing a hammer and do their job. If you go, I can almost guarantee you your project will get done 2 weeks faster.
yeah. And have an architect that can get you permits
Yeah.
quickly. But thank you guys so much. Appreciate your time.
Yeah.
Hello. Thank you guys. And as you know, I'm actually in the middle of a $200,000 rehab myself. Flipping is my nightmare. It is an absolutely awful situation. I hate all of it. But yeah, I just went down with my village, with my big ass pregnant belly bump and kind of teared up about how long it was taking, and like they felt pity for me, so I got things done a lot faster. Right now we've got lunch. It's an hour-and-a-half lunch, networking lunch.
Can I give one give?
Yeah.
Sorry. So we created a special page for everybody that came, well, everybody that's here at the summit. If you guys got your phone, who's flipping single-family homes? Raise your hands. Okay. Who needs a deal in the next 30 to 60 days? Raise your hands. Okay. Take your phone out, just like Mr. Neal did. He stole my thunder too. Everybody's stealing my thunder. If you take your phone out, there's a number to text. The number is 31996. That's the number, 31996. And text the word CLICK. CLICK.